Let's bring in our panel now. Joining us live, Ross Greenwood and Kieran Gilbert to dissect the Treasurer's address. Kieran, let's start with you. A lot of expectation management there from the Treasurer ahead of the October budget, with clear warnings that these updated forecasts show the economic outlook is tricky in the short term, to say the least.
Yeah, Ash, and I think if you look at this document, the economic statement by the Treasurer today, what those numbers represent are, if they do eventuate, of course he conceded forecasts can be problematic, but if these numbers do eventuate, that it would equate to a soft landing for the economy and a very positive result politically for the government. What you're seeing in these numbers, revisions in terms of wages growth upwards to 3.75% for the next 2 financial years. And according to these forecasts, at the same time, inflation is moderating and then falling, both on a timeline heading into the next election. So, as I say, the revised numbers, if they do eventuate, would see a soft landing for the economy and a good political outcome for the government. On the expectation management, sure, this is part of that build-up to the October budget. Still blaming the government. They're in their honeymoon period. They can get away with it for the time being. But the rubber hits the road in a big way come October, when the decisions being made are this government's. And that's when the blaming might still exist to a certain extent in this upcoming first budget for Chalmers, but nowhere to the level that we saw in that economic statement today. I don't think voters will buy it. Politically, I don't think it'd fly.
Yeah, Jim Chalmers wasn't holding back on that front, was he, when it came to the coalition, saying that previous budgets had been bursting with waste and rorts. He said there were booby-trapped, hidden cost blowouts were plaguing the last budget. So no doubt we'll hear more about that in the lead up to October. Ross, we heard a lot about inflation, as Kieran alluded to there in that address, with a warning it will get worse this year, moderate next year, normalise the year after. So we're looking at 2024. The Treasurer pointing out, of course, that the medicine is tough to take as Australians are bracing for higher interest rates.
And of course, that's what the government is also going to bank upon, is that people really don't do it too tough, and that there are sufficient jobs around the place for people to be able to keep paying mortgages and for businesses to be able to survive and keep the jobs going. So what the Treasurer told us is pre-election, the budget forecast was for it to peak at 4.25%. As we know, it's right now, from yesterday's number, already at 6.1%. But what he says is by later this year, it will peak even higher at 7.75%. Kieran points out, of course, then after that, it's expected to moderate. And look, there are signs that inflation is beginning to cool. Oil prices lower, timber prices lower, many other aspects are starting to ease up. But there are still some things, such as energy, which is rising in price. So by mid-next year, inflation is expected to be some 5.5%. And then by the end of next year, 3.5%. The following year, 23-24, it would be back within the Reserve Bank's preferred band, between 2 and 3%, around 2.75%. Now, that is almost a perfect set of numbers, and it doesn't necessarily follow always as perfectly as that. But in the meantime, the Reserve Bank will continue to raise interest rates rapidly, and of course, it's going to be what happens overseas that could also influence even these economic settings here in Australia.
Yeah, and that's a real point, isn't it, Kieran? The Treasurer keen to point out that we're not alone here. He pointed to the US Federal Reserve raising rates overnight by 0.75%. GDP figures expected overnight to be weak. China, the domestic economy there, struggling as well. And the Treasurer obviously saying that that directly affects us. Rising inflation will be paired with slower than expected GDP growth here in Australia. By 2023-24, we're looking at it being around the 2% mark.
Yeah, exactly. And so what can the government do? The government can rein in spending, and that will eventuate, you would think, in the October budget. Should they have gone sooner? Should we see action now? Are we seeing an emergency to the level of inflation, the highest we've seen in 3 decades or more in this country, greater internationally? Should he have made a down payment, so to speak, in terms of some moves to cool the fiscal side of things, so that we know the government's approach is in tune with the monetary policy of the RBA? Because at the moment, all we're seeing in terms of trying to put a lid on this inflation is the RBA. We know that there's going to be some fiscal restraint in October, but should they have brought it forward, as I say, a bit of a down payment? They haven't done that. This is only about an economic update, not a budget update. And Some of the forecasts economists have suggested to me in the last 24 hours are too optimistic in terms of the GDP rate, in terms of unemployment. But we have to remember as well, if they go for, say, a more cautious number or a more negative outlook when it comes to GDP and unemployment, that also has a flow-on effect to the budget outlook. And I don't think the Treasurer wants to do that at this point ahead of his first budget come October of this year.
Ross, what do you think this all means for businesses, for employers when it comes to jobs? The unemployment rate expected to stay low through the rest of this year before returning to 3.75% by June 23. Over that period, though, we're also going to see wages growing faster than in previous years. But again, inflation putting a dent in the impact of that too.
Yeah, the one thing that people need to understand is that there is a direct correlation between inflation, high inflation and unemployment. And the reason is that when businesses have costs rising and profits falling, they will make a decision at some point about where they need to cut, just as government might need to cut at some point in the future itself. The one thing that I got out of that was that Jim Chalmers, he said it a few times, and he said not every good idea can be funded. And that gives you a little bit of a reading, at least, that the government might have lots of good ideas, but they might not be able to afford them in the way in which he's trying to set the budget. The same will be true for business. And the real problem is not right now, where there's a lack of workers, but if immigration reverts to something like normal, and there are a lot more people in this country, as to whether really that unemployment rate is too optimistic in these forecasts and whether it starts to rise more rapidly, which is what you've seen in the United States, which is what you're now seeing in the UK and Europe, that it's actually gone from a shortage of workers very rapidly to a point where there are more workers out of work. That doesn't help the budget. It doesn't help the economy because under this scenario, there is no recession. Australia's economy continues to grow. And of course, that gives also scope for the government to continue some of its spending programs.
Yeah, what did you think about that, Kieran? Do you think that the Treasurer was leaving some wriggle room there? As I mentioned before, he was really laying into the coalition about the state of the budget, bursting with waste and rorts, as the Treasurer alleged, but also pointing out that government spending is higher too at this point, again in part due to inflation.
Yeah, exactly, which you and Ross have been pointing out, and as the Treasurer has said, is largely driven by global factors, so hampered to an extent as to what they can do on that front. And I go back to that earlier comment that I made in relation to blaming the predecessors. That's fine. That's fine for this honeymoon period, but this only lasts so long. It gets to a point where they've got to make decisions. What do they do to rein in expenditure? It's not just about cutting programs, it's about the timing of programs and the way the money is delivered as well, whether it be infrastructure or whatever else. They've got to be looking at ways to ensure that this fiscal approach is in tune with the RBA and what they're doing. I spoke to a Cabinet Minister this morning who was very frank with me in relation to the view when it comes to migration, that they've got to get more people in. But if this inflation problem is harder than the government expects in the numbers articulated by the Treasurer today, and it does drive up rates, and we do see a scenario, as Ross alluded to, when unemployment starts to climb, is that appetite going to remain for bringing more workers in, whether they be skilled migrants or whatever else? Because we know that the shortages are right across the economy. Fine, yes, we need people coming in now, and I know the government is having some hard discussions with union leaders along those lines to say we need more workers. But if we see a scenario where, as Ross said, we're seeing elsewhere, inflation harder to bring down, rates go up, and it's a harder landing, I'm not sure that appetite for bringing more and more workers in will remain, Ash.
Kieran Gilbert, Ross Greenwood, we'll let you go and pour over the detail presented in that address a bit earlier, and we'll get more analysis from both of you on your own programs a bit later on this afternoon. Thank you so much for joining us with your take on that.